The financial advisor explained that taking out a loan can be a great way to make large purchases, but it's important to know how to repay it properly. This week's story is about a guy who borrowed $1,000 for a new motorcycle, but soon found himself owing way more than he expected. Watch what happened. Hey there, this is our story. Once upon a time in Cambodia, there was a hard-working young man named Saroon. Saroon was a diligent worker, earning a steady income as a tailor. He had a wife and 2 children who he loved dearly and wanted the best for them. One day, Saroon saw an advertisement on Facebook for a brand new motorcycle that could make his life easier. Unfortunately, he didn't have enough money to buy it outright, so he decided to take out a loan. Saroon went to a microfinance institution and explained that he needed $1,000 for a down payment on a motorcycle. The lender agreed to give him the loan with an annual interest rate of 8%. However, they also informed him that he would need to start repaying the loan immediately and would have to make 24 monthly payments of $62 each. Even though this seemed like a lot to Saroon, he was excited to own his first brand new motorcycle and felt confident he could handle the payments. Every month, Saroon dutifully paid back a portion of his loan. As the months went by, he continued to work hard at his job and felt proud of himself for being a responsible borrower. However, after a while, Saroon started to fall behind on his loan repayments. Life had been tough lately, and his motorcycle suddenly seemed like a luxury he couldn't afford. But he kept putting off calling the lender, hoping that he would eventually be able to catch up on his payments. One day, Saroon received a phone call from someone at the lender. They asked him why he hadn't been making his payments and told him that his loan balance had grown to over $1,700 due to unpaid interest. Overwhelmed and embarrassed, Saroon tried to explain his situation. But the lender was unsympathetic and threatened to send him to court if he did unrepay the loan immediately. Terrified, Saroon knew he had to take action fast. He called his wife and asked her to borrow money from her family so that he could pay back the lender. His wife, worried about her husband's well-being, agreed to help. With the money borrowed from his wife's family, Saroon was able to pay back some of his loan and avoid going to court. However, this was just a temporary solution, and he knew he needed to find a way to manage his finances better. Feeling defeated and desperate, Saroon reached out to a financial advisor who helped him get a better understanding of his situation and gave him tips on how to avoid falling into debt. Traps in the future. The financial advisor explained that taking out a loan can be a great way to make large purchases, but it's important to know how to repay it properly. He shared some simple tips with Saroon that could help him avoid getting into debt. First, always pay on time. Paying on time is one of the most important things you can do as a borrower. By paying on time, you'll avoid late fees and keep your credit score high. Set reminders or use calendar notifications so you never forget a payment. Second, pay more than the minimum if you can. Most loans have a minimum payment amount, but if you can afford to pay more, it will help you pay off your loan faster and save on interest payments. Even an extra $10 or $20 a month can make a big difference over time. Third, track your income versus your loan payments. It's important to have a clear understanding of your finances. Track your income and expenses, and make sure you're paying off your loans according to your budget. This will help you stay on top of your repayments and avoid any surprises. Fourth, communicate with your bank if you're in trouble. If you're having trouble making your payments, don't hesitate to reach out to your lender. They may be willing to work with you to create a payment plan that fits your budget or defer some of your payments. It's better to communicate than to hide your head in the sand and hope the problem goes away. Saroon was grateful for the advice and realized that he had made some mistakes that put him in this difficult situation. He promised himself that he would never fall into a debt trap again. Now let's play a quick game. What percentage of people do you think will follow their financial plan? 50%? 60%? How about 90%? Well, according to statistics, only around 30% of people actually stick to their financial plan. That means most people are likely to make the same mistakes as Soren, which is why it's so important to share these tips with everyone. That brings us to today's main question. Do you pay your loans early or late? Let us know in the comments below. We'd love to hear your thoughts. And here's a bonus tip for those of you who have stuck with us until the end. You are awesome! Let's celebrate by sharing a secret that nobody else knows. PO. By repaying your loans on time and in full, you build trust with lenders, which means they're more likely to offer you better terms in the future. This is a game changer, because as you become financially free, you'll have access to better opportunities that will help you achieve your financial goals. And hey, if you're not quite there yet, don't worry. Just keep doing your best and eventually you'll get there. We hope you enjoyed today's story and we want to thank you for watching. If you liked the video, give us a thumbs up and subscribe so you never miss out on our weekly content. We've got plenty more stories and tips to share with you, so stay tuned. Here's another quick fact. 40% of Americans can't afford to replace their income if they lost their job. That's a lot of people who are just one paycheck away from financial disaster. That's why it's so important to be prepared and have a plan in place for unexpected events. Remember, you are in control of your financial future. As we wrap up this week's episode, we want to leave you with some food for thought. Don't let the pressure of making large purchases overwhelm you. Take your time, weigh your options and make a decision that you're comfortable with. Taking on debt isn't always the best solution, especially if you're not sure you can keep up with the repayments. There are other ways to make big purchases without going into debt, such as saving up for a down payment or buying a used item. It might take longer, but it's worth it in the long run. Remember, good repayment builds trust and financial freedom. See you next time.